Hi, I'm Kelly Zitlow. I've been helping people realize the dream of home ownership for over 25 years. One of the things I find so interesting and that my clients are most confused about is the meaning of an APR. So today I'm going to address it. We're going to talk about APR and how an APR differs from an interest rate. But before we get started, do me a favor and subscribe to this channel. I truly have a passion for home loan education, and I love sharing this information because it's so important to our everyday lives. So please subscribe and join our community. Okay, so what does APR mean? It actually stands for annual percentage rate, and it's essentially the rate that you are paying that's including any cost that you're paying to acquire the loan. So when you're going through the home loan process, think that there are going to be two rates that you're going to focus on. One is going to be your interest rate, and then the second one is going to be the annual percentage rate, or the APR. And the reason that they differ is that the interest rate is just the rate for the money that you're borrowing. So think of it that way. It's just the actual interest rate for whatever loan amount it is that you're purchasing. Let's say that you are financing $60,000 and you're paying a 5% interest rate on $60,000. Then that's your interest rate. 5% is your interest rate. However, when you look at your APR is going to include any other costs that you are paying as part of the home loan process. So that could be some closing costs. Not all closing costs are APR fees, which is why it gets a little confusing. The federal government has set forth through the Truth in Lending guidelines, and it specifically states there are certain fees that lenders have to use that are calculated into the APR. And those fees can be origination fees, discount points, any processing fees that you're paying to the lender, the title company's courier fee, doc prep fees, the escrow fee to the title company. Those are fees that are actually calculating into that APR. So it's going to raise what is your interest rate to a higher percentage because it's now including these other costs. But the other thing that's really important is that if you are purchasing a home and you are putting less than 20% down and you're going to pay mortgage insurance is also an APR fee. So now that APR is going to look much higher than if you weren't paying mortgage insurance. If you're paying a funding fee, if you're taking out an FHA loan and you're paying mortgage insurance premium as well as upfront mortgage insurance, all of that is calculated into an APR. So the real thing about the interest rate in the APR, some things that you just kind of want to know is the reason that the federal government came about with this whole APR type of number is that the intent is to allow consumers to shop and really understand not only the interest rate, but the cost to acquire that particular interest rate. And so as you move through the home loan process, you're going to find that APR and that interest rate is going to be presented to you at certain points in the process. So initially up front, when you are getting pre-qualified, this is prior to you going under contract if you are purchasing a home and prior to the lock if you are refinancing a loan. And so during that pre-qualification phase, the lender will show you both an interest rate as well as an APR based on your particular scenario. And this is why it's so important to really kind of understand when we start to look out there on the internet or we talk to our neighbors, well, they may have a different scenario, so their APR will naturally be different. So based on your particular scenario, prior to the loan being locked, we are going to present you with a total cost analysis to give you some options with financing that home that you're purchasing, and also be able to transparently disclose to you what that current interest rate is. Again, not locked because you don't get locked until you're under contract, but at least for that day, so you can start to get a feel about interest rate and what the associated APR is. So one way that's really easy to kind of help understand and explain APR is, let's say that you are taking out a home loan and it's a $60,000 home loan. And let's say that you are not paying any closing cost as part of that home loan. So you are not paying anything. Then in theory, your interest rate and your APR would be the same figure. But once you actually start to pay cost associated with the acquisition of that home loan, now you're going to start to see that APR is going to increase. And again, if you're not doing 20% down, or you're using a government-backed loan and there's mortgage insurance or funding fees, then all of that is being calculated into that APR, and that's why it looks higher and different than your note rate. So how will you know what your actual APR is and your interest rate is during this home loan process? Once you are, let's say you're purchasing a home, once you go under contract, then the lender is going to take in all of the property information, the contract information, all of those details. They're going to get with you on some interest rate options. And as part of those interest rate options, they're also going to give you an associated APR. Now, once the lender has the property address together with some other information that they probably had during the pre-qualification process, then at that point, they are going to issue a loan estimate. A loan estimate is a federally regulated document, and it is going to show you not only your interest rate, but it's also going to show you what the APR is. It's going to tell you if your rate is locked in or if your interest rate is floating, which means that if you are floating an interest rate and the rate is not locked in, then that interest rate can change day to day, because interest rates change actually not just day to day, sometimes they change every day throughout the day depending on what's going on in the mortgage-backed security market, which is what drives long-term mortgage rates. So if you're under contract and you're closing within 45 days, your lender's probably consulting you about locking in the rate. That way, for sure, you know what your interest rate is and what your APR is. In addition to the loan estimate, which is the federally regulated document that home lenders are required to use, many lenders also use different types of apps. We use in particular Mortgage Coach, because Mortgage Coach will allow our buyers to see in one succinct kind of format what is an APR at 5% down, what's an APR at 10% down, what's an APR at 15% down. So we use Mortgage Coach in addition to the actual loan estimate to be able to educate our buyers so they really understand how all of the pieces come together, and really being able to see that kind of that side-by-side comparison just with down payment options. It really is helpful for people to see an APR in action and the differences that even mortgage insurance can have on an APR. So if you're curious about how an interest rate and APR impact your payment, check out the video in the description below. You're going to see both of these rates in action, and you're going to see the net impact to the actual house payment. So that's it. Now you know the meaning of APR, or annual percentage rate. Remember, it's always recommended to work with an experienced mortgage lender to help you through the home loan process. If that's in Arizona, California, or Colorado, please feel free to give me a call. If you have questions, comment below. And don't forget to like, share, and subscribe. Until next time.